Okay, the presentation I'm going to give today is a bit different from the ones we have heard so far, in the sense that it's less technical, and the purpose is to give an overview of what the OECD has done, is doing, and will do in relation to tax compliance, and in particular in relation to tax avoidance. I will then conclude with some personal remarks, which I hope will be of help to the people that will be in the drafting sessions tomorrow. An introduction about the OECD, the club of rich countries which is imposing its views on the rest of the world, as some people think. The way I tend to think about it is a forum where representatives of different countries get together in order to discuss policy choices, the way they have been implemented, to share best practices, and in certain areas, and in particular in the tax area, to set some minimum common standards that allow the free trade and investment to be carried on with as least obstacles as possible. In terms of the tax work is carried out by the Committee on Fiscal Affairs. And the role of the committee is, in a nutshell, to facilitate the conclusion of double tax treaties, to promote communication between countries on policies in relation to the avoidance of international double taxation, and what's relevant here today, to counteract tax avoidance and evasion. How does the committee work? Basically, it develops standards, guidelines, and best practices, and provides a forum for discussion. And increasingly, in the recent past, there has been a tendency to try to open the dialogue as much as possible and to involve non-member countries as much as possible in the discussions, which lead to the creation, to the consensus on these international standards. And Brazil, together with a number of other countries like India, China, South Africa, and Russia, is part of a program which is called Enhanced Engagement, which tends to create stronger links between the organization and these countries. In terms of the work on tax compliance, there is a working party of delegates, as I said, from member countries and non-member countries, that works on tax compliance and exchange of information. As you know, there has been a revolution, as some people call it, in the recent past in relation to exchange of information, bank secrecy, and tax havens in general. Because of this revolution, a new a body which already existed in the past, the Global Forum on Transparency and Exchange of Information, was formed. There are now 95 countries participating. Brazil is an active member of the forum, which is separated from the OECD itself, and is charged to make sure that countries implement their commitments in relation to exchange of information. Because of that, there has been recently a reorganization in the work of the OECD on tax compliance, and a new working party has been just formed and will actually meet next week. It's called Working Party number 10 on tax compliance and exchange of information. What does this working party do? Basically, you see it on the slide. It provides strategic policy, legal, administrative, and technical support to develop and improve the legal, practical, and administrative framework to facilitate exchange of information and administrative assistance with the view to improve tax compliance. So basically setting the standards, what are you required to as a country in order to meet the standard, and how do we do it in practice? What are the forms that we use to request and exchange information? At the same time, it is also meant to enhance the ability of countries to tackle tax avoidance and evasion and to counter aggressive tax planning. And considering the subject of this seminar, that's the part on which I will focus on. And what I would like to do is an overview in relation to the past, the present, and the future of the work of the OECD, which is relevant in relation to tax avoidance and aggressive tax planning. Past. Let's start from 1977. A recommendation of the Council. The Council is the body of the OECD where the highest representatives of countries meet, the ambassadors, usually. This recommendation in 1997 recommended governments of member countries to do a number of things. Strengthen their legal, regulatory, and administrative provisions and power of investigation for the detection and prevention of tax avoidance and evasion, with regard to both domestic and international aspects. To facilitate, improve, and extend exchange of information with the view to combating tax avoidance and evasion, with due regard to the respect of taxpayers' rights. And then to exchange experiences on tax avoidance and evasion. Based on this recommendation, the Committee of Fiscal Affairs, which is the representatives of countries which work on tax matters, usually at the level of Director Generals of Ministry of Finance or Commissioner or Deputy Commissioners of Revenue Authorities, they have to carry out their work in order to implement this recommendation. What were the outputs in the past? 1987, the world was slower, as you can see at that time. It took 10 years to issue a report. Nowadays, we are asked to issue reports in 6 months, which puts a lot of pressure on delegates and the Secretariat, of which I'm part. What does this report say? It says tax avoidance is of concern to governments because such practices are contrary to fiscal equity, have serious budgetary effects, distort international competition and capital flows. And these are possibly some of the arguments that you may want to take into account when drafting your anti-avoidance provisions, or when considering whether a specific set of facts and circumstances should or should not fall within the scope of the general anti-avoidance rule. The report goes on and says, obviously you can reduce your tax liability. For example, you can choose among the incentives which are the most beneficial for the taxpayer, or refraining from consuming taxed products. I don't drink beer, I don't pay the tax which is due on the consumption of that beer. And here it becomes clear that there is a difficulty, the difficulty of defining tax avoidance. This report does not define tax avoidance. Why? Because, as I told you, this report is the output of work carried out by 30+ countries. And obviously countries have different views on what avoidance is, as we have heard many views yesterday and today about the same topic. It does, however, contain certain specifications, certain elements which it says are usually present in the case of tax avoidance. And it says, usually there is an element of artificiality to it, the sham transaction doctrine, if you want. Or, to put it in another way, which may also be interesting considering the discussion we had yesterday about the meaning of dissimular. The various arrangements in a scheme do not have business or economic aims as their primary purpose. Secrecy may be a feature of modern in 1987 avoidance, and tax avoidance often takes advantages of loopholes in the law or applying legal provisions for purposes for which they were not intended.